Hey traders, Michael or 𝐿𝐼𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Hump Day, November 12th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, just looking at how much we're up today, we're only up 0.06%, so pretty much a nothing day, a nothing burger. But guess what? What I said in last night's video, in which this area right here was gonna be overhead resistance, and we stalled out exactly at that area. There were three pretty big breakdown candles in this area right here. It also coincided with a big fat round number at 685. What was the high today? The high was exactly 684.96. We'll give that a funny how that works. I said yesterday and the day before that this area is a place where the market shouldn't just waltz right through. And we saw exactly that. So although we are up 0.06%, this was a potential trading opportunity and a place of overhead resistance, at least from an intraday perspective. Going over to a 15-minute time frame, I do have a number on the board. That was our first overhead resistance number at 685.65. So a little spike of the big fat round number. Real quick, going over to inside the numbers, the zero dark 30 notes, the morning game plan that's laid out to members well before the opening bell. You can see that that was our morning pivot. Also the first place of overhead resistance. As you can see, we came up a bit short right when we opened up. We were looking for that higher number. That was going to be the morning trade. But take a look at this. This is the extended hours. We got a nice visit from the thieves in the morning. They took it from us. So we didn't quite get the morning trade that we were looking for. We did have other opportunities around the board. We'll get into that later. But the thieves in the morning got it first, came up short of that number when the opening bell rang, and pretty much took off without us. Scrolling down, still on the zero dark 30 notes, we don't need to worry about this number. We were opening right on it, and we were really waiting for that 685.65, but the next numbers down below was at 683.35, and then we also had that gap underneath, which you'll see in a second. That came in at 682.90, and then a support zone down below at 682.05 to 681.30. So we got some of those numbers on the board. Here we have the number right in front of the gap right here at 683.35. You can see spiked it a little bit, then ripped it right back up, came back down to fill that gap. That gap was some short-term support. We weren't necessarily trading that because, as you can see, we did come up a little bit short, so that does constitute as a first time best time situation, either looking for a spike of the number or waiting for the next number down below. The next number down below happened to be at 682.05. Spiked it by a touch and then ripped it right back up. Where to? That gap number found overhead resistance right here, came back down again, and then got to the back end support number at 683.30. Once again, spiked it by a touch, not a big deal, ripped it right back up. You can see firsthand how these numbers can be utilized as overhead resistance on the way back up. Okay, stalled out some short-term overhead resistance right at the 602.05 number right here, and then made our way right back to the gap number, all for it to come right back down. So we didn't necessarily get the exact trade that we were looking for, that first overhead resistance number up above, but there were some other trading opportunities with these numbers. Most of these were trader's choice. I had a bearish bias today, so I was looking to get in short. Some traders bought some puts right at the open. They certainly got paid. So overall, it was a pretty good day for inside the numbers and the live room. How about a little trade in Tesla, where we had some traders in the live room make some money? We had our second support number at 433.90. As you can see, spiked through that number by a touch, but then did indeed rip it right back up for a nice little trade. Again, in the live room and inside the numbers, we don't just trade the spiders. We have an opportunity around the corner for everybody. You could pause the video, read the notes, and go back to the chart to double check the work. Everything's in here for you. The numbers, the morning game plan, the afternoon write-up, so you know exactly where the numbers are, where the market wants to head to. We literally have everything that you need in order to become a successful and profitable trader. If you keep finding yourself guessing at the market, guessing at the numbers, trading emotionally rather than strategically, then you need to check out Inside the Numbers / the live room. Alright, so what else do we have going on in the spiders? It's a possibility that we can stall out at this area. Remember, this place is a place where the market shouldn't just waltz right through, and she showed you that today. Took a little breather. This was overhead resistance. But, capital B-U-T, if we do start to get above these highs right here at 685.80, and even go as far as closing above that number, then the next destination up above is this gap right here at 687.39, and then pretty much we're right in the vicinity of the recent all-time high. once again. So obviously time will tell, but I'm very curious to see if we still continue to find overhead resistance at this area right here that we're currently at. Okay, we could push up a little bit higher, take care of that number that we were looking for all morning long. That was at 685.65. So that is considered some unfinished business. They can go and grab that tomorrow. But the most important thing that we can gather from today's session, tomorrow's session, and Friday's session to wrap up the week is where we close regarding that area near the 685. Okay, it's a big fat round number. Overhead resistance. You got these highs right here. So really call it 686 to 685, a zone of overhead resistance. If we continue to close candles below that zone, then I think we could go a little bit lower, maybe go back to retest the 20 period moving average, and even go as far to fill this gap right here. The gap down below comes in at 670.97. That's a possibility, but we definitely have to close candles below this area right here. How's that trend line working for Camp IWM? I mean, we called that area in the spiders pretty much on the dot. We called that trend line in Camp IWM. That worked out perfectly. And we'll get to this in a moment, but we also called that overhead resistance the back end number in the transportation department, literally on the freaking dot. We'll go over that in a second, but let's quickly go over back to Camp IWM, talk about what happened today. Obviously found overhead resistance at this trend line, and then we came right back down, closing below the 244.30 number. We even had someone in the live room take that trade at 244.30 for a nice little base hit. As you can see right here, spiked through it by a touch and then ripped it right back up. Why? Because that number is important. You can see that number is very important because we pretty much ate time off the clock at that number. So if we continue to close candles below that number and the trend line, then the next destination down below is going to be this gap right here if we keep closing below. Keyword closing. The close is the most important thing that we can gather from the day. The trading day. How long have I been pounding this zone of overhead resistance in the transportation department? I'm pretty sure I put that zone on the board last week. Yesterday, I mentioned that we came up short of that first number. That is a first time, best time situation. So the second time around, we're either looking for price to spike that first number, possibly even get to the midpoint of those two numbers, or even go as far as getting to the back end number, which is exactly what the transportation department did. That number is important for a few reasons. Number one, it's this high right here. That was one of those infamous spike the highs and rip it right back down in the other direction. Number two, it's at a big fat round number at 16,500. The exact high today is 16,504. Funny how that works. Those numbers are important, and we found overhead resistance right at this zone, just like we said what would happen. So we called the spiders, we called Camp IWM, we called the transportation department. Doing pretty good so far. If you haven't checked it out yet, I highly recommend you go back to last night's video and watch it. Everything that you're seeing here right now was talked about in last night's video. What about the Q people? Pretty much a nothing day. We're down 0.08%, and we're still in that phase of eating some time off the clock, but also, which unfinished business is she gonna head to first? Either the gap up above at 632.08 or the gap down below at 609.74. Here's another number for you guys at 621.79. I put this in green because this could be considered a pivot number. It's not really a longer term pivot number. It's more of a medium term, I would say. Really all it is this breakdown candle high. If we start to close candles above that high, then we're more likely to take out these highs right here and then go up to the unfinished business at this gap up above. But on the flip side, if we close below that number, the breakdown candle high, then we have a better chance of going down to the unfinished business down below at 609.74. Pretty much at the stage of just waiting to see what the Q people wants to do as she continues to eat some time off the clock. What about XLF, the financials? We're up 0.86% today. We have now reestablished price above all the moving averages, so the trend is your friend. She blew by the 53.44 number, is heading to 54.06 right now. That number comes from the weekly chart, this breakdown candle high. And then if we start to get above that and close candles above, then we're pretty much right at the all-time highs. Really, all this down move right here was to test the 20 period moving average, home base. Ate some time off the clock at home base, closing candles below it, closing candles above, below, slightly below. Now this week we're above. Remember, anything can change in the snap of the fingers. We still got Thursday and Friday before the week is over, but XLF is looking pretty strong right now. Nothing wrong with the financials, nothing wrong with the overall structure of the market. Last but not least, we got SMH shaking my head, the semiconductors. Smash Mouth. We're up 1.28% today. We said yesterday that this was a little bit of a canary situation, divergence between multiple markets. The spiders were in that overhead resistance zone, while the SMH yesterday was down 2.16%, closing below the 20-period moving average. So that could have been a little bit of a tell. Now today comes along, we've reestablished price above the 20-period moving average, opened above it, came back down to retest it, found support at that number, and then closed above. We do have a gap up above. That comes in at 358.79. Let's go ahead and make this blue. And then we also have another gap up above. We talked about this number this week. That's at 366.10. If we do start to get above the 358.79 number, it's pretty much coinciding with this big time breakdown candle high. If we start to get above that area and close candles above, then the next destination is going to be this gap right here at 366.10. On the flip side, if we continue to find overhead resistance at this area, market found overhead resistance right here, once again right here, again on Monday this week. So that definitely is overhead resistance in SMH. So if we do close candles below, possibly even get back below the 20-period moving average home base, then we have this big gap right here, some unfinished business down below at 348.12. Time will tell what SMH wants to do, but those are your levels. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐿𝐼𝐼𝐹rost. Please don't forget to like, comment, subscribe, all that good stuff, as it helps me and the channel out a lot. If you made any money today, leave a comment down below and help a brother out. I'm not the brother. The other traders are the brothers. With that said, we're pulling the ripcord for today. We'll be back ready to go in uniform for Thursday's session, and of course the video later that night. I hope each and every single one of you has a great rest of your day. Stay safe and take care now, folks.